Hi, all. This is Dr. J, streaming live from Long Island, New York, where it was a colder than I would have liked kind of day. A little wind kicking up in my face, especially till about three o'clock. It kind of got turned warmer. Winds abated, sun came out, and it stayed nice till about 6:30. I actually took a walk in the afternoons from about not from 3 to 6, but hung and actually made it to the park, put it that way. Got back late. I'd rather be watching the Mets than doing Dr. J right now, but I feel like I should at least honor requests tonight. So I'm going to honor requests by John L. for Dare and Anthony for 3 stocks, the symbols of which I don't remember. And I think it was Chris for Tandem Diabetics, one that stings a little bit because I got out. I didn't remember to get back in. These things happen. In any event, when I got out, I told everybody between 50 and 52 would be my reentry. It didn't get to 50, but it did get, I think, below 52. I just wasn't paying attention. I would have nibbled at least. And the reason I'm a little bit growling a little bit is because now, of course, where is Tandem? $63. I'd gotten in at 52. Would have been perfect timing, of course, but 53. I think I sold it at 56 when it plunged below my line in the sand. And actually, I was late in doing that because I didn't pay attention either. So I should be using hard stops and so on, and hard limit orders. But instead, I've been trying to watch, and when you're out all day, it's hard to watch everything. Even though I have it on my watch list, I don't know. I'm negligent, and sometimes that costs me money. Sometimes it makes me money. In any event, do your own due diligence. My opinion is strictly known to not constitute investment advice. Please subscribe to the blog if you haven't already. Tell your friends about me. Share the link. Write comments. Give me a thumbs up. Let's get to it. Let's get right to the video charts tonight. Hopefully the Verizon is going to cooperate. Looks good so far. All right. Let's take it from left to right. This is John, D-A-R-E, you asked me about. I took a quick look. I see it's in biotech, and other than that, I don't really know what they do. But let's take a look at the chart. Well, after coming up from the pennies to get to as high as over $3, it kind of collapsed, and it seems to be finding a bottom at about $1. So it looks like it's making a bottom with support at $1.01. And yesterday was a very even kind of day. I think a very narrow range. This is a stock that typically has the day before. Day of Thursday, it had a nice range of 9 cents. But on Friday, the range was only 3 pennies from low to high. Opened at $1.08, closed at $1.08. Opened at $1.08, and closed at $1.07. So hence down a penny. Yesterday it closed at $1.08 as well. So without knowing too much about it, I see it's up against resistance at the 50, the purple line right above the where it closed. a little bit more than right above. It's 115, the 50-day. So that looks like resistance because it's been respecting that 50-day moving average over the last couple of 2-3 weeks since it collapsed from, on what day? 4/8, it collapsed from a low of $1.25 to a high the next day of 109. That was a collapse. Since then, it's respecting the 50-day for resistance, and it's respecting the buck 01 for support. So if you want to trade between those lines, I guess you can do so. If you want to go for a swing trade, it's an even money bet right now. 107 to 114, let's say, and 107 to $1. And actually, you probably have to place your stop a little bit lower at 98 cents. Give yourself a little breathing room. And I think you can stay in it until very near the 50-day and then just exit if you want. That's another way of playing it. But the 50-day is going to come down a little because is it going to come down a little or is it going to go up a little? I think it'll actually go up a little because 50 days ago it was lower than it is now. So on the average, might go up actually from here. And it has to do with how the stock does as well. So if the stock goes up, so will this, but less. So, again, I would trade it between the 50-day and the $1 level. It's risky to hold. Obviously, it's risky to hold this thing much below $1 because you're losing. For every penny, you're losing 1%, just like for every penny, you're gaining 1%. So this is a very low micro cap stock, I suppose. I didn't check that, but it's probably under 100 million, almost for sure. I mean, I shouldn't say that, but probably it is without looking, and probably even less than that. So it's going to be very, very, very profitable or very, very unprofitable, depending on which the next move it makes. In the meanwhile, you could play it between the 50 and $1. So I don't know about the fundamentals. If you like this one, I suppose you do. You could just play it to go up and keep it as long as it respects that dollar and doesn't break below it. And then you look at further support as the stock moves up. One thing you can do is keep it on an up move until this shaded area is hit. You see the shaded area in the RSI? So when it goes above 70, you can get rid of the stock. That's another way to play it. So you could keep it for a longer period trade, stop loss maybe at 98 pennies. And if I were to enter this, and I thought it had good fundamentals and good prospects, I might want to keep it forever, but I doubt it. I'd probably sell at least half when the RSI got to be 70 or greater. So that would be my selling point. Okay, let's look at, hope I helped. Am I going to buy it? I don't know enough about it at this point. I might look into it further, and if upon further investigation, learning more about the fundamentals, I like the concept, I might buy it. But right now, I can't say for sure whether I'm going to buy it or not. But I appreciate the suggestion on DARE. John. So keep them coming in. What's this symbol? cpah, Counterpath Corporation. I don't know what it does, Anthony, but it too is respecting the 50-day, and it's also finding resistance right at the top of this red candle. I would think is resistance. Take that out, you're good to go maybe to the midpoint of this red candle. So I'm looking, if I were to buy this thing, I would look to get in around $2 with selling about half of it at 214 and then again at 230, something like that. So that's how I would probably play it on a swing trade. My stop loss would probably be, I don't know, the 50, where is the 50? 175, that's a big dip. So I would want a tighter stop loss. I would probably use the low of the day on Thursday, which is 186 is my stop. So 186 to 214, what do you know? That's an even money shot. But then you let it ride, then I might let it ride to 230, 232. So on half of it, I get even money. On the other half, I'm getting odds. This chart looks pretty good. As far as I could tell. I mean, it had a collapse after a huge green candle. But look, it had a huge green candle, and it respected the huge green candle in that it did not did not even intraday go below the low of the day, which was 160. So to some extent, it respected it, but it did close below the open of that big green candle on 326. So that negates a lot of what I like about the stock. I like these big green candles, but when the body is violated, I like it a little less, but at least the candle remains unviolated, the low. The low has not been, there's no lower low than the bottom of that green candle. So, the fundamentals were decided for me, and I don't know the fundamentals, but certainly worth a buy if you like the fundamentals, I guess. Would I be buying this? Again, I would have to look into it more. I do want to add to my biotechs, and this is not a biotech, I don't think. So I'm more inclined to be buying a biotech like this one, AYTU. This one I like better. I think it's biotech. I don't remember. I did look at what it did, and I just don't remember. But I do like the chart on this one. It has a pretty long trending, pretty big upward trending bias. So I kind of like this. I didn't draw in a trend line. I don't know why I didn't, but I did draw in support and resistance. I like the 50 for support, and then below that is the 163 level, and I'm still on the other chart. I don't know what I'm doing, John. Anthony, sorry. I'm very confused. What did I do to the aytu? I lost aytu. I lost it. Let me get it back. Aytu, like aytu brute, right? I told you I was tired. Did I tell you I was tired? I'm tired. I'm proving it. AYTU, AYTU. When I'm tired, sometimes my brain wants to shut down. AYTU, aytu, like aytu brute, that's better. Let's get that chart back. I hope it comes back. Come back! Okay, let's go to full screen. I must have accidentally X'd it out, thinking I was Xing out cpah. All right, so I did draw this one had the long trend line, that's right. And in two different places, if you start the trend line here or if you start the trend line there, doesn't seem to matter. They're both ending in about the same place, right about where we are. And then if you draw a trend line going down, you'll see that we're at the apex of the triangle, and it looks like very well could break out. I would think it would break out to the upside. The chart is very good. So in that case, we'd be looking at a big move up to, let's say, this high first, 215, let's say. And then if it goes beyond that, you're looking at 252. On the downside, you're probably looking at, I like tight stops. So the low here, $1.84. So $1.84 is a 16-cent loss. And then you could look for a 16-cent gain to balance that out for a target, I guess, and then let the rest of it ride. See what it does. If you get your first target, then just let the rest of it ride. You can do the same thing I suggested on the other stock. Sell it at when it gets to 70 RSI, or wait for 80 if it's looking good. It depends on how good it is looking. If it takes out 252, I don't know what the chart looks like, how far back you got to go for new highs, let's say. Oh, it's been really, really high, hasn't it? So it must have had some I don't know what, a lot of disappointments and somewhere along the line, right? Yeah, it's kind of collapsed from the double digits to the single low digits. Okay, so that doesn't mean anything, of course. We're looking at the 1 year. There's so many biotechs that have collapsed, but in the 1 year and in the more importantly, in the year to date, it looks really nice. If you go to the 1 year, it doesn't look quite as nice. It definitely did collapse within the year, but it does look like it's bouncing back. So this is a very interesting one. This one, of all the stocks that I looked at, I think would interest me the most to look further into. AYTU. NNA, Navios Maritime. I don't understand the charts and the huge dividends. I don't play these kind of stocks, but let's take a look at the chart. I'll make believe I didn't see the 20% dividend in February. Okay, so just looking at the chart, it's looking okay. I guess we're not great, but it is coming to triangle. At the very least, I think it'll make a touch of the descending trend line again. And if it does it quicker as opposed to later, maybe you can swing to about 780, which is a nice swing target. And your stop would be the 50-day or this trend line, whichever comes first. So you're getting in at the close, it would be 726. The 50-day is 681. That's 19 and 26 is 45 cents on the downside. And what I say, $8? No, 780 on the upside. 780 is 55 cents. So you're getting a little bit of odds. You know, basically it's an even money shot if you want to swing this, the way I see it. Again, if you want to let me know more about the fundamentals, Anthony, on this one, please feel free to. As I said, not sure the dividend yield, does that really mean anything, or what? How do these maritime stocks really function? I've seen these high-paying dividend stocks, and I'm always leery of them. I really have never played any of them, so I don't really comprehend the meaning of it. Of course, 20% dividend from where it is now is $1.45. That's pretty big dividend. Ex-dividend, it would be below $6. So it's weird, you know. As it approaches February, I guess I don't know what it does. I guess it might go down a little. I don't know. To give me some further color on this explanation, if you feel like it. Don't have to, of course. It's a free country, at least for the time being. Tandem diabetes, up 3 on Friday, and I had sold it when I woke up, so to speak, to the fact that it was selling off on 4/1. That's when I sold it, probably right around here, not midway, but closer to the low, probably about 56, something like that. And I told my viewers of the vlog that day that I'd be back in somewhere between 50 and 52. Well, it did go below 52, right? Went to 51.37. That would have been swell for me. But I was inattentive, didn't see it, and just let it go and look at it now. So this is a run up before earnings, which is at the end of the month on Tuesday. Would I buy it now? Probably not, because I think it's very close to resistance here at 65, and is really an earnings report play. So I'd rather stay away from those earning report plays. You know, if it beats, fine, it'll make new highs. If it has negative earnings, look out below. So I'm not in the mood. If I'm in the mood, I go to Atlantic City if I'm in the mood for that kind of thing. Of course, if I had been holding it for a long time, I probably would hold through earnings, having a nice gain. But I'm not. That would be new money, and at this point, it's too risky for Dr. J. At least that's how I feel about it. Of course, everything I have to say is my own opinion. It's in my opinion, in my humble opinion. So, with all humility, check with an investment advisor before acting on anything I say. Even though I do have occasionally great ideas, I have a lot of clunkers as well. So to avoid the clunkers, do your own due diligence. And please let me know, Dr. J, this one looks like a clunker. And then maybe I'll heed your advice and stay away. I'll heed your opinion and stay away. We don't give investment advice in comments. We don't give investment advice in the vlog. All we do is express opinions, period. You should always do your own due diligence. You should take responsibility for your own money. Never rely on anybody else. To me, that includes an investment advisor. But if you have faith in an investment advisor, by all means, go with a certified financial planner or what have you. They're doing well by you, that's great. I just always felt I could handle my own investments, and my opinions were at least as good as most advisors that I know. Okay, so this has been Dr. J, streaming live from Long Island, New York. And I want to say shalom, sayonara, au revoir, arrivederci, ciao, hasta mañana. And tomorrow I will do biotech.